Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the aftermath of the Fed Chair Powell testimony, speaking to Republicans and Democrats in DC here this week, as he does this twice a year and takes questioning from the Democratic and Republican sides as to the economy and what they're thinking of doing with interest rates. And it's usually good for some price action across asset classes. And we're seeing that here today as everything in flux, from U.S. dollars and U.S. interest rates or treasury yields, as you might imagine, very closely tied to what Fed Chair Powell is saying and doing, all the way to gold, Bitcoin, and the stock market as well. Moving in some very interesting trends off of what Fed Chair Powell is saying. And let's start with what he is saying, and that's been that rate cuts are likely at some point this year. Again, he's spoken this way the last several times that he's talked to the general public, whether it's an FOMC meeting or this most recent testimony in Congress. And it's been a balanced talk of, yes, we're looking at interest rate cuts. We feel like we've already hit the peak of our interest rate hikes, but we are still looking for inflation and some of our other economic data points to just cool off a little bit more before we make that first cut and essentially kind of give in to a rate cutting environment. And you see here that we're still on pace for lower rates in 2024, and he's speaking to that. And this has actually been a welcome sign for the stock market and a few others that we'll get to in just a second, because some of the fear was starting to seep in that, well, man, if inflation isn't getting down to that 2% target and we're already a few months into 2024, could we possibly go the whole year without a rate cut? And those fears have definitely been quelled in recent trade. And you look here at the projections for the Federal Reserve's overnight rate at the end of 2024, and the bulk of this probabilistic curve is focused around 3 to 4 rate cuts, essentially around 75 or 100 basis points lower than where we currently are, which is 5.25% to 5.5%. The largest likelihood at 4.25% to 4.5%, like I say, about 100 basis points lower. And so some people liking that, of course, still need to see the inflation and maybe employment numbers continue to soften up here in the U.S. to get that first cut. We'll see if it's in March or May or June or later on in the year. But that was the big takeaway from Powell's statement, was a little bit more dovish as markets interpreted it. And here's just how markets interpreted it. Going with U.S. dollar to start, euro gets back above 109. Aussie is on a hell of a run here, a real big bounce back for that Australian dollar, nearing 66 cents. Last I checked, it was up a percentage point on the day, of course, fluctuating depending on when you're looking. But U.S. dollar falling more than 50 pips against a bunch of major pairs, Aussie included, and euro right there around 50 pip gains. Japanese yen able to muster up some gains, as well as Canadian dollar and a number of major currencies, as this U.S. dollar is softening up amid the softer talk from Fed Chair Powell. When we were in the first few months of 2024 here, and the fear was kind of setting in, well, if inflation doesn't get lower, could Fed Chair Powell not not cut at all in 2024? U.S. dollar was running up, and you see that this euro got all the way down below 107 for a brief period there, and the Australian dollar got really low as the dollar was resurging, now seeing a reversal in that USD. And of course, no coincidence that US rates are moving a little bit lower here. Of course, the Fed doesn't control treasury yields, and if they do cut rates, they would cut their Fed funds rate. But the treasury yields, as you imagine, here in the US are highly correlated, positively correlated to what the Fed does to interest rates. And so, for example, the 10-year here got as high as close to 5%, and the overnight rate from the Fed is just over 5%. And certain treasuries did get beyond that 5% marker, but now they've moved, treasury yields have moved a little bit lower, anticipating the cuts that are to come from the Fed. And you can see in recent trade, the last couple of days, the 10-year going from almost 4.4%, now under 4.2%, heading toward 4 even, which we only spent a handful of weeks under 4% in this 10-year yield back at the end of 23, start of 24. And that's really kind of been the low that U.S. yields haven't moved below for any consistent long-term period. So we'll continue to eye that 4% with treasury yields. And I'm sure a bunch of people looking at potential mortgages and car loans and everything else liking the fall in interest rates, hoping for those cuts to come sooner rather than later. You know who else is really liking this? The gold market. Holy smokes. Ascending beyond 2150 in trade here today after Fed Chair Powell's testimony, and this is getting into pretty wild territory for the gold market. All-time highs in terms of gold futures trading above 2150 here. Now looking at, can they press 2200? Are we in a new range for gold? We were stuck between $2,000 and 2100 for so long. We'll see if this 2150 bid holds, and if they can, like I say, press new highs towards 2200. You'll remember that gold prices tend to be negatively correlated to interest rates. Gold, a non-interest bearing flight to quality. Treasuries, an interest-bearing flight to quality, and so if interest rates are high, people might flock to that treasury more than the gold market. And so now gold moving higher on some softer talk from the Fed, potential cuts coming here in 2024. Another market that is moving higher, and it's hard to say how much of this has to do with Powell or interest rates, because it's been a wild ride for the last several weeks here in Bitcoin and Ethereum, but Bitcoin bouncing back, getting back above 67 in recent trade, and ETH, kind of the bigger story here this week, because Bitcoin obviously fell from its highs and now has regained those losses. Ethereum hitting 3,800, huge move in that smaller market cap, number 2 cryptocurrency. We'll see if they continue, and we'll see if the dovish talk from Powell continues beyond the testimony and into the March FOMC that'll be coming up. I'm sure everybody watching that. But for the time being, US dollar, US interest rates falling, gold, crypto, and the stock market bouncing back here amid some softer talk from Powell at this week's testimony.